Hello, everybody. Good afternoon, good morning, good evening, good day, wherever you're listening and watching us from. This is Court Talks number 12. We're sorry for the small delay, but we had a little bit of a technical issue. I mean, I love technology, especially when it works, but it happens. It happens. I'm very happy to be here. My name is Rafael Gonçalves. I'm the communications manager for CarConnex, and I'll be co-hosting this great show today with Vincent Molinari. If I can call you Vince, everybody
Please
seems to call you
do.
like that in the industry. I'm straight from Brazil, and you're straight from New York. That's the beauty of technology, and that's the beauty of our world, right? We can share the world as a very like a coffee table, right? We're all around the
Absolutely.
some coffee. So, Vince, I'm very thrilled to have you here, straight from FinTech TV Studios. So, I would welcome you. I would love to have you talk a little bit about yourself and a little bit about our background and a little bit about FinTech TV. Please, the stage is yours.
Wow. Thank you, Rafael, and delighted to be here. Been a long time fan of Core Connects and everything that Oscar has been driving and helping deliver truly as a community member, really building education and awareness and collaboration. So delighted to be here. Uh, maybe next time I'll come to Brazil. Sounds like a good place to be to have great conversations.
Yes.
Um, so wow, my background has historically really been in capital markets technology and really modernization of securities law, and that's been a pretty long tail journey over 35 years, in really looking to both sides of the access to capital as democratization to access of capital as we talk about, but also the other side of that as wealth creation and opportunity for investors who ordinarily may not have access to those investments, but really looking at everything pre-Jobs Act, going through the Jobs Act, the ability to generally solicit securities using social media or what became the um, removal of the ban on general solicitation, crowdfunding for equity, what became
Mhm.
Reg A plus, and really those mechanisms and how do you holistically um, uh, evolve our capital markets. Um, and then through really what became the advent of digital assets, incorporating blockchain DLT technologies across financial service systems, which really led me to the media business, really through the advocacy. And I was very fortunate to provide testimony to U.S. Congress 3 or 4 times, and I guess 2 dozen petitions for rule change, comment letters to CFTC, FINRA, and the SEC, really on digital transformation. So that advocacy really led to um, great subject matter that wasn't really being spoken about in mainstream media. And that was a bit of the education awareness that we continue to talk about. That became the arrival destination of FinTech TV, where we really look to amplify and elevate stories of people, projects, companies that are either advancing digital transformation, whether that's blockchain, stablecoin, digital assets, cryptography generally, or the other component that we really care deeply about is sustainability, ESG, climate change, the Sustainable Development Goals of the United Nations, and really where a few years ago where we saw those intersecting, and maybe we were early in the view of the intersection of digitization and sustainability, but I think we're seeing more and more of that converging. So somehow I was guided or found myself into the media business, and very proud that we have our main studio at the New York Stock Exchange on the floor of the New York Stock Exchange, and operate in many jurisdictions around the globe, which I think is a really strong signal of the demand side for this content being somewhat borderless, and really kind of where we're finding ourselves in this global digital transformation.
Wow, that's really an amazing journey. And you talked about the Sustainable Development Goals by the United Nations. I'm not quite sure, maybe wrong, but I think it's number 8 or number 9 that talks about economic growth and work. Uh, I don't remember exactly, and that has everything to do with what we're dealing with today, right? With the rise of capital markets, with entrepreneurship and technology, that's been in the center of a lot of those changes recently, right? I believe it's the goal number 8. I'll Google it as we speak.
Yeah. Well,
I used to know the 17 by heart, but I don't remember exactly their numbers right now.
but I think you're right, Rafael, and I'll jump to SDG 17, which is collaboration and partnership. And when we look at that and look at the anyone, whether you want to talk about gender equality, financial inclusion, clean water, oceans, education, agriculture, pick anyone. I think the advancement of the Sustainable Development Goals are really exponentiated by technology, and that's what makes me so excited in looking at that, both from moving private sector capital to the goals themselves, but really to the education awareness and really the trying to reach the goals of 2030.
Yeah, yes, yeah. That's challenging. That's really challenging. But you have been in finance since the late '80s, if I'm not mistaken, right? And it feels that not long ago we were using those green screen computers, and we were programming stuff on MS DOS, right? Typing command lines, and now 40 years later, we're talking about blockchain. 30 to 40 years later, we're talking about blockchain. We're talking about technology to help transactions worldwide. And how do you feel? How do you feel that technology has impacted the financial world?
Yeah, it's a great question, and thank you for pointing out how old I really am. But I think when we look at that, having the
I
benefit.
just looked at your LinkedIn profile.
Yeah, no, and I guess I am proud going back to late '80s, starting at Lehman Brothers, and being through many cycles, right? And I think when we look at the advent of technology, what our markets have told us, I chuckle when I think of the green screens in the process, but if we look at every tradable asset class, it's probably true globally. We looked at it as phone brokered. Then there was a bit of hybrid with phone and computer. Then we went to electronic. Then we went to high frequency, algorithmic, right? So we've seen this compression, and what I'd say is the efficiency of markets being driven by technological advancements. So we continue to see this again across any asset class. And when we talk about publicly traded equities, when we traded in fractions, right, and then we went to pennies and decimals, right, and saw that process, and the efficiencies that come to spreads and transparency, which then seem to have higher trading volumes, right, as we have price compressions and efficiency. So the more technology that we have chasing inefficiencies in our markets or our infrastructure, the more efficient they become, and competitive in price compression. So I think that we see that history repeating itself. And it's kind of where my view was in 2015, 2016, when we really started to look at blockchain as part of the system. For me, it was much more of an evolution of capital markets engaging in the next greatest technology than it really was of a revolution that was perhaps going to have cryptography replacing every piece of market infrastructure, but really that converging and making it more efficiency. So I think we're seeing that script play out yet again.
Yes, yes, and it's amazing how uh, uh, not how fast things change, because speed is a matter of perception, but how deep changes have been going through, right? I remember I worked for the past decade for a bank, an automaker bank, and I joined into a 2012, I guess, and I left during the pandemics. But the role of our bank towards the automaker changed completely. How we proceed with securities and how we proceeded with financing and how we proceeded with KYC changed completely within 10 years. I mean, And then when I think about what I did 10 years ago, I said, wow, I think, man, I was practically a caveman, but I thought I was so technological, but things have been changing and evolving very quickly and very deeply. And regarding digital assets and fintechs and all these deep changes that have been going on, we are witnessing this true evolution in business. And how do you see this role, the role of this revolution in democratizing access to capital and entrepreneurship? Do you believe it's never been easier to be an entrepreneur? Do you believe it's never been tougher? We have more access to capital, or is it more complex? Is it more accessible? How do you feel about it?
Well, I think I'll start with being an entrepreneur is never easy, no less a startup entrepreneur, right? Maybe some of the access to the tools are getting better. So I think we have a greater recognition. I think that's where I'll start of how important now private marketplace is, private companies to our job creation, to economic growth, to really general prosperity. So I think what we've seen as part of this evolution, particularly since the passage of the Jobs Act a decade ago, the increased issuance of private securities that are surpassing the aggregate of our public securities marketplace. And we could talk about other things within our public market infrastructure, whether Sarbanes-Oxley, decimalization, Reg NMS, that had an impact on the number of IPOs, the size of them, but really the recognition that alpha capture and wealth creation is happening earlier in private securities, and the valuation increases afforded to private companies are really similar to what we saw in a growth stage public company size when they were going public, that you're able to capture that as in private securities pre-public offering. So I think the attractiveness of the private security market has grown dramatically, largely because of access to technology and modernization of securities law. Again, whether we go back to the Jobs Act and we talk about crowdfunding for equity, changes to 12G and 2,000 shareholders to Reg A plus, certainly the removal of the ban on general solicitation, I think has been very important. So I think we see that revolution as really an evolution of understanding. And now, what product do you bring forward? What is investable? How do you have access or democratization to those opportunities that afford themselves for wealth creation earlier in the cycle, and to many more individuals, both we can talk accredited and retail, than just the institutional participants. So I think that's a really meaningful advancement. And then I think if we overlay blockchain, DLT, any kind of digital asset, for the most part, it's largely the same securities instruments with a different wrapper, right? And in a digital format. And that, I think that lends itself very well to transparency, to the construct. I love a smart contract. Sorry, I love a smart contract from the standpoint that you can construct it as a fixed income instrument, revenue share, equity. So I think that product creation really creates greater opportunity, which may speak to a little bit of easier access to capital that helps the entrepreneur grow.
Nice. Yes, at CarConX, we work deeply in that educational aspect of capital access and democratization of capital, right? We do believe that private capital. I mean, we know there are 4.7 billion investors worldwide, if you consider non-accredited investors. So we do believe that there's enough capital for everyone, and good ideas are there, and entrepreneurs are there, and of course, technology evolution. They are all there to help us, right? So CarConX is a proof of it. And so is FinTech TV, right? Because you switched, not you didn't switch, but you added your financial expertise to your communication expertise, right? So this is something that 20 years ago we would never have thought, right? Having an online conversation and streaming an online TV to help educate and to help bring information that's not on regular media, right? You are also a product of this evolution.
Well, no question, Rafael. I couldn't have dreamt of what we're doing today even 5 years ago, no less 10 years ago.
Yeah.
Both from, as we talk about perhaps a move to singularity and the efficiency and cost reduction of technology, but really and maybe COVID has a lot to do with this, and the advancement of acceptance of digital transformation as a communication tool. But, we really have accelerated by quantum leaps in just the last couple of years. And I think what's worth really noting as we talk about access to capital, education, and awareness, it is really the ability to engage communities that have been really intentionally, I don't want to say that, or inadvertently left out, right? Whether that is women, people of color, minority groups, urban communities, rural communities, barrios. When you think about the brain trusts that exist in communities that just didn't have the access to how do I raise capital? I don't have a community, I don't have access, to now be able to dream that those entrepreneurs can now have access to capital, that is game changing in terms of
Hmm.
benefit to our planet as holistically. But that's kind of a dream come true.
Yes, totally, totally. We have a blog post on CoreConnect's website, which is called I may be wrong here, but it's called "Online is Proving Successful for Minority Founders," and that's basically it. I remember editing this text. I think that the funding from crowd raising grew like 30% to minorities only in 2001, 2021. I mean, uh, it, it, it's a big growth. We still have a long way to go, but it's still growth, right? It's still positive, and that's basically it.
Yeah, no, listen, we there's a long way to go. Particularly, if we look at access to venture capital to for women-owned businesses, we're in the single digits, 6, 7% of all allocated capital to women. If we get into women of color, it's literally 2 or 3%. So as much as we've had advancements perhaps with the crowd, we have to move to greater advancements across the capital stacks.
Mhm.
Hello.
Yes, yes, I see that. Another topic that you guys cover a lot on FinTech TV, you talk a lot about financial issues, of course, and business, but you also have a very strong feeling for ESG, right? We already talked about the Sustainable Development Goals, which is obviously environmentally connected, and sustainability and environment are, of course, connected. But when you talk about sustainability in business, it's not just about preserving trees and reducing carbon and everything, right? It's about creating jobs and about creating solid companies and about paying taxes and about doing things compliantly, right? And governance, the G in that acronym, sometimes doesn't seem figured out because who's responsible for to make everything work like that? The compliance issue, the financial issue, the CEO, who owns that topic? Who owns governance? Everyone. What do you think of it?
Well, and thank you for bringing that forward, Raphael. I think, start with perhaps who owns it, right? So if we look at the great leadership of Paul Pullman, the former CEO of Unilever, we stop talking about a shareholder, right, and talking about a stakeholder, right? So the stakeholder is the customer, it is the shareholder, it is the executives, it is the community members, it is everybody. So who owns it? We all own it as a stakeholder, right? So when we begin to shift our mindset of perhaps from being a consumer to be a contributor, right? We look at the process a bit differently. I think when we look at it from a fintech TV standpoint, and part of it is frankly part of my personal mandate that I look at. Profit is not a dirty word. Maybe greed can be. Profit
Mhm.
creates sustainability, and that sustainability is really what's needed to create systemic change. So when we look at whether we want to talk about sustainability, ESG, climate change, the conversation has now changed to, in my opinion, what used to be a bit of it's a nice to do thing as corporate branding and perhaps the marketing department, to now that we can measure externalities. Very important. Measuring externalities and having clean data sets and being able to meta tag that in ways that we never could. You're moving that conversation now to the front office. It's the CFO. It's the treasury department of those corporations, and now you're speaking to their fiduciary responsibility, right? So it's a much bigger stick, if you would, when you nice to have, yeah, good branding, to wait, there's a fiduciary responsibility in the way that you act and govern, the way you operate within your supply chain. And again, I'll come back to technology. Now that technology provides transparency, right? Companies, people are being exposed for being, washing, so to speak, in many cases. So the corporations that conduct themselves properly, given transparency, are going to be rewarded with much more loyal consumer shareholders, I'll say stakeholders. And we're going to see their valuations be rewarded, their access to capital and their cost of capital being cheaper. And those that don't conduct themselves properly, it's going to be the inverse. Less valuations being impaired, much higher access to capital, and I say a flight of the consumer, because the consumer wants to align themselves with corporations that they believe in and trust. So I believe we're in the pathway of a much different engagement as corporations and its stakeholders.
Yeah, that's that. Yeah, I totally agree with that. Especially because now, public is, you said about technology and transparency. Public can now see that in real time, so they can choose. Oh, I'm not buying from companies that test on animals. I mean, and it's easy to look it up. It's easy to find a competitor that has a similar quality, and people are willing to pay, to even pay a little more, right? For companies that they can rely on, that have this kind of values and that are social responsible, right? That's a very interesting change. You talked about 5 years ago, like you couldn't dream of what you're doing now 5 years ago, but this is also part of this deep change that we talked about. That came on technology, right? And we're streaming. We are streaming right now. We are live streaming to our YouTube, to our Facebook, to our LinkedIn channels, and you are daily streaming, talking on your shows. YouTube has been bought by Google quite some time ago, and videos are clearly the thing for internet right now, and probably for the near future. How challenging is it for you guys to educate people online using streaming? How do you feel about this challenge? Because it seems today that everyone wants to see a TikTok dance and recipes and cute cats and cute animals. How challenging is it to wake up every day and no, I got to educate people. I got a mission. I got stuff to do, and I'm gonna get my message across.
Well, another great question. So, in everything that we do, we have challenges, right? So I think the challenges are overcome by one's passion or desire to succeed. So, um, less of a challenge, I think, than it is about realizing goals and our passion to help do our part, our personal responsibility to help put our planet in a bit of a better place. So, you bring up YouTube. When we started with these shows early on, we were out on YouTube and we were putting things forward, and we had 12 million views on YouTube, not really knowing what we were doing, to be quite candid. But what it told us, we talk about it as signals, right? The signals that we see from the noise. But that told us that the content was important, that it was being underserved, and there was an opportunity. And we had the great benefit, perhaps because of some of our historic history in financial services, but to work with stock exchanges around the world. So for me, it's much more about trying to have advancement by almost inward out metamorphosis of change versus trying to combat one another. So having the purview of the New York Stock Exchange and having one of the most iconic, or perhaps the most iconic stock exchange in the world, um, to have these different conversations, right? Digital transformation and sustainability coming out of the New York Stock Exchange really gave us this great ability, and frankly made some of those challenges less because we had that ability. Then it was NASDAQ, the London Stock Exchange, and so on. So we incorporated a bit of the shared economy vision. We could never think as entrepreneurs to have global access to production studios and build those all ourselves, but by leveraging partners like the exchanges, but really having these stories to be able to storytell and open, I'd say, open hearts, that open minds, that open the allocation to capital to things that people care about, whether that's an affinity group, fan base, diaspora community. Because when you have that connectivity to the heart, it is again, goes back to passion. And if people can deploy capital to things that they care about, it's a different mechanism. So I think, when we look at all of this being technology enabled, whether that's in our capital markets, whether it's in our storytelling, our advocacy, it comes back to this great level setter that we just didn't have. And how do we utilize technology to advance the things that we care about? And for us, it's access to capital. It is the sustainable development goals. It is ESG integration. And how do we create that new feedback loop? And I think that really allows us to feel that we can run through any wall to accomplish and break through a challenge because there's a bigger end game.
Yeah, wow, that was really inspiring. That was really inspiring because every time we're on the internet, we have this thing. Oh, but who is listening to us, right? Who's watching us? Why do we do that? But yeah, there are people out there, and they're reaching us. And every time we have a new core client or a new core partner, such as you guys, such as FinTech TV, it's interesting to notice that we are working with purpose, right? We have some purpose, and just like you said, uh, uh, profit is not a sin, right? Profit is not a wrong word, or is not something wrong. That's what keeps companies sustainable, and what keeps taxes being paid, and what keeps jobs, what keeps people happy and fed and everything, right? That was very inspiring answer, Vince. Thank you very much for sharing that. And we talk about blockchain, you talk about digital assets. You just had this week, on Tuesday, yesterday, you just had Oscar on your show, right? Talking about our new launch, Core ID, right? To help investors invest and reinvest in an easy way. So how do you feel about that? I mean, you've been for a long time in the financial industry, and now you're also in the communication business. You're in the streaming business. Uh, how do you feel about that changing business, that daily changing business, and how challenging is it to keep up to date? Because maybe what I talk about today can be void in like in a matter of weeks or days. I don't know. This technology we're using right now, maybe it doesn't exist in the next year or so. So how big is this challenge of keeping up to date with this financial, technological, and communication industry on a daily basis?
Yeah, so maybe I'll carve that out in two ways, if I could, Raphael. So
Sure.
I think, the adage of technology, run fast, break things kind of mode, it is certainly well proven in technology innovation, particularly around consumer product, et cetera, et cetera. I think where we have to hit pause a little bit when we think of the speed of adoption, it becomes different when we're talking about people's money, when we're talking about um, securities offering, right? We have the 33 Act and the 34 Act. So all of a sudden, the technological advancements many times are well ahead of our securities law or the modernization of the securities law. So a tendency, unfortunately, in many cases, for it to be a bit more of a lag in the abilities of technology and what our securities law, or perhaps lack of clarity in many cases, that the securities law will allow us to do, which has many of us advocating on an ongoing basis to kind of bring regulators and legislators up to speed. And frankly, that's how I met Oscar. More than a decade ago in our Jobs Act, pre-Jobs Act advocacy, and since then. So I think what are you really doing when it comes down to it is how do we solve a pain point? A pain point typically using technology to create an efficiency that allows that access to capital, to the wealth creation, and new product. So when I look at Core ID, I'm super excited about the possibilities to create efficiencies with the identity that allows that to be transportable, perhaps ultimately from platform to platform. But the onerous process of accredited investor verification, certification, re-upping that, and having to do that multiple times across multiple platforms. So when I think I understand where a Core ID really does is create that transportable, passportable ID that allows for efficiency. Anytime that we can have efficiency, right? Theoretically, you're moving friction from the system, therefore better access and better flow of capital or investment into in aggregation and raising capital. So I think that's a tremendous step forward, and one that's going to serve the market well, and not just well for weeks or months, but perhaps on the front edge for years.
Yes, and we're also talking about reliability, right? You have a passport. I mean, you are a participant. You are a regulated participant. People know who you are. You're definitely you. That's completely compliant, right? So this is something that we have to keep working upon, right? Compliance and being transparent, and that's a lot that technology can do for us there. And
Well, you're right. Oh, I'm sorry.
no, no, please, please, please.
No, I think it goes back to the core, Rafael, where I'd say this is where it's much more again of the evolution and the revolution. If we go to the core tenets of market infrastructure, market integrity, right? Removal of counterparty risk, certainty of who you're dealing with, right? AML, KYC, go through all the various levels of vetting and due diligence. You have a healthier marketplace. Healthier marketplace has better offerings, more investors coming there, better liquidity, better access to raise capital, and ultimately access to secondary liquidity. So I don't think conceptually any of that is new, right? That's what's proven to make markets over and over again. But we're talking about new tools, technologies to again make that more efficient and bring to bear better tools for markets or assets that haven't had that. So, I think it's really wonderful.
Yeah, that's great, and that's just one of the we're just it's just the beginning. Oscar likes to say that it's just the beginning. The best is yet to come. We're always moving forward. We're always pushing, and that's the beauty of technology. We can if you can. I know it's a cliche, but if you can think about it, we can do it. There's a way to do it.
Yeah, well,
If
listen, we have the desire, no question.
Yeah, if it's not against the law, we definitely can do it nowadays. And we see a lot of fintechs, at least here in Brazil. At least we have a very modern financial system. You can open a bank account with your mobile phone. You can just take a picture of yourself and your ID, and you're already connected to the government data bank, and you can have a bank account. You can open a bank account, and you don't even have to leave your home. That's amazing. That's one of the good things in technology in Brazil. But we see a lot of fintech companies that sometimes they start growing and they are bought by big banks or big companies. What do you believe that is the next step for this kind of startup companies to keep relevant and to keep growing? Do you believe that being sold is the way? Do you believe that innovation is going to spread around and we are going to have more startups? How do you feel about the market right now? I know it's a
Y-
$1 million question.
Yeah, yeah. Look, I think it becomes the billion-dollar question, right? Particularly with a little extra inflation these days. But look, I think as an entrepreneur, we always have a vision of the exit, right? And whether that's acquisition, public markets. So, it is a typical pathway for large incumbents to